The outlook for crypto is still really good for the next 5 to 10 years. I don't want to overuse the word super cycle, but we know that Wall Street wants to tokenize.
The cryptocurrency market is at a pivotal moment. While short-term volatility continues to shake out weak hands, industry experts and financial leaders are pointing to something unprecedented on the horizon. We're not just talking about another bull cycle. We're talking about a fundamental shift that could define the next decade of digital assets. In today's video, we'll break down exactly why top analysts believe Bitcoin could reach anywhere from $200,000 to $1 million, what's driving institutional adoption at record levels, and why traditional market cycles may be a thing of the past. For years, the crypto market has operated on a predictable 4-year cycle, largely tied to Bitcoin's halving events. But financial leaders are now arguing that this pattern is evolving into something much bigger. The launch of Bitcoin ETFs has fundamentally changed how capital flows into this market. We're no longer dealing with just retail speculation. Institutional money, the kind that moves slowly but decisively, is now entering the space in ways we've never seen before. This shift suggests we could be entering a prolonged, decade-long upward trend. The traditional boom and bust cycle may be smoothing out as more stable, long-term capital provides a foundation for sustained growth. Let's talk numbers. Industry projections for Bitcoin range from $200,000 on the conservative end to $1 million for the most bullish forecasts. These aren't random speculation. They're based on growing institutional demand, limited supply, and Bitcoin's increasing role as a hedge against economic uncertainty. Now, this doesn't mean the path will be smooth. Analysts acknowledge that we could see dips to around $75,000 in the short term. But here's what's remarkable. Prominent figures in the industry remain committed buyers at these levels. They view any significant pullback as a buying opportunity rather than a reason to panic. While Bitcoin grabs the headlines, Ethereum is quietly positioning itself for massive growth. Analysts expect Ethereum to climb significantly as it integrates further into global payment systems. The rise of tokenization is a key driver here. Traditional assets, from real estate to securities, are increasingly being represented on blockchain networks, and Ethereum remains the dominant platform for this transformation. As more of the world's value moves on-chain, demand for ETH is expected to surge. Perhaps the most compelling narrative emerging right now is the use of digital assets as a hedge against national debt and currency devaluation. This isn't just a retail investor theory anymore. Major institutions are taking notice. Recently, Harvard University disclosed cryptocurrency holdings as part of its endowment strategy. When institutions of this caliber start allocating to digital assets, it sends a powerful signal to the broader market. Crypto is no longer a fringe asset class. It's becoming a necessary component of diversified portfolios. One of the biggest catalysts on the horizon is regulatory clarity. Industry leaders consistently point to the coming year as a decisive period for crypto policy. Clear, well-defined regulations could unlock a flood of institutional capital that has been waiting on the sidelines. Banks, pension funds, and asset managers have expressed interest in crypto but remain hesitant due to regulatory uncertainty. Once those barriers are removed, we could see an acceleration of adoption that far exceeds current projections. The consensus among experts is clear. The cryptocurrency market is maturing. Short-term volatility will persist, but the long-term outlook has never been more bullish. Institutional adoption, regulatory progress, and the growing recognition of digital assets as a legitimate hedge are all converging to create what could be the most significant wealth-building opportunity of our generation. If you found this analysis valuable, hit that subscribe button and turn on notifications so you don't miss our daily market updates. Drop your price predictions in the comments below. Until next time, stay informed and invest wisely.